YouTube. This is Terrence Ray. What's going on? I got a stock market update for you. Today we're going to be talking about bonds, yields, and volatility. I'm going to say it again, bonds, yields, and volatility. What you ought to be watching right now, the signs are coming from the bonds, the yields, and the vol. So let's get right to it without holding you. Right now, so the market just closed. We just had the closing bell. You can see the VIX was up 5% today. We had a jump there. VIX futures are up. Uh, you got the S&P 500 futures down about 1%. NASDAQ futures down about 1%. Same with the Dow. The Russell leading the way down 1.5%. Whenever I see which way I see the Russell, when the Russell is out leading the pack, that's how I know, like, whether it's leading up or leading down, that's when I'm more sure of the move that I'm looking at. We got the bonds are down, the notes are down, oil. Basically, if you look over here, you see a whole lot of red. And the only places where you see green, beside Tesla, is the only stock on my watch list that was up today. And it started peeling off near the end of the day. But the green that you do see is volatility and yields. So we're going to start right there. Let's look at vol first. I want to show you the VVX. The VVX is the volatility of volatility. So this is the volatility of the VIX. And you can see we had this gap up yesterday, right? So now we know, like, hey, we got to move. And you can see we're accelerating on the awesome oscillator, and we're accelerating on the ACDC down here at the bottom. So basically, momentum is moving up and is speeding up on the vol of the volatility. Now, this line right here is a line that I have drawn right at 110 for the VVIX. That's like your old snap line. Once we get to this line, then we rocking and rolling. And you can see we are moving as of today towards that. Like, we got all the way up to over 100 on the VVIX. Now, that right there telling you that vol is increasing. So vol is increasing, right? The vol of the vol is increasing. Now let's go look, and I'm getting ready to show you exactly why it's increasing. Look at the 2-year yield. Got a gap here. The 2-year yield look like it's getting ready to try to take these highs out. Now, it gapped up. What's today? Today is Thursday, so what was that? Wednesday to Monday, it gapped up. Now we're getting a move in the 2-year. You're gonna get your most aggressive moves in the yields in the 2 and the 10, or the 2 and the 5, or maybe even I think they got like a 90-day or 3-month. And that's where, because these are more affected by interest rates and what the Fed does or don't do, or the Fed chair speaking, they're more reactive. The further you go out in the yields or the bonds, the slower the reaction will be. So you see this right here in the 2-year. You see the 10-year yield is up. I think the last one to actually turn up on the day was the 30-year. Now, let's go and look. Now, look at this. Look at this chart. You see how these look. Now, let's go and look at the bonds. Look like a direct opposite of what we were just looking at, going down. Now, people panic when bonds start moving with any type of velocity, because bonds are supposed to be something that is supposed to be like a slower, like less volatile, more safe investment. What you're looking at right now, let's look at the notes. Now I got some triangles drawn in here. This is what I call, this is a harmonic pattern. Not what I call, but this is what technical analysis would call a harmonic pattern. You generally get harmonic patterns when you get like a reversal or a continuation of a move, right? So like if we were to get one down here at this bottom to signal a up move, or where we are right here at a top after this little slide this way to signal that this is going to be a continuation of this down move. Now this is crazy. So you say, well, these patterns come about using like Fibonacci levels. So all I did from here to here in this pullback, it hit the sweet spot in the Fibonacci retracement, right between the 38 and the 61. And then it broke down. Once I put my extensions on, it hit the first level, the first take profit level. Generally, you at least get A, B equals C, D, but we didn't get that right away. It pulled back, hit another retracement level, and you can see this long wick. And what solidified it for me is the reaction from that level. Like it got up here, hit long wick down, and then we got this long red candle, and now we off to the races to the bottom. Now, I got levels. I got short in here. I shorted this about a week or two ago. I put in like a short call spread, and I took that out for profit. I got back in another short call spread today. In this particular, it should be over here. It's not showing it. Let's see. If I go to the trade tab, you guys can see it. I don't know why. It should be over here. Normally your trades would be. I only got. Let's see. All right, there you go. So I did it what, yesterday? Okay. So you can see right now what I have in this particular account. So you can see the shortcut, and you can look over here on the option chain and see where I'm at. Now, you say, well, what's the significance of a guard? Like when you don't get these type of harmonic patterns all the time. And they don't come like when you get them and you get the reaction you want. Like I'm a little bit low key mad at myself for not buying, just going flat out and buying put options, but you never know, right? So I got levels down here. It can go and take out any one of these levels, and it's look, and you can look at the momentum to the downside. So let's just say now it could very well just hit here, and then that'd be it. That would be great for the market. If this Gartley pattern continues to go down and takes these lows out, you will see panic in the market. You will see panic in the market if it takes out these lows. I'm gonna pull out. I'm gonna go to the TLT just to show you broader. So this is the TLT. This is the ETF of the bond market. You see how the bond market's just been going down, going down, going down. And I got I got trend lines drawn here. If this breaks out of here and takes this low out, you will see panic in the market. So I'm not telling anyone else what to do. I'm just, giving you my analysis on it. I will say this. I did go to cash and I managed my own 401k. I went to cash today. So now I'm still putting money in, but I'm in cash. I think like a little small percentage of it is in like a fixed income, but the majority of it, I self manage, and I'm gonna sit in cash. I'll sit and wait this one out, at least until I see it start. I see the bonds on an upward move. Now I was long before, before today. After seeing that, I actually saw that Gartley pattern in the market yesterday evening. And I watched today just to see what would happen. And as today, it just looked like it's gonna keep. So we're gonna at least get it to hit this level. And as you can see, as the bonds go down, everything else going down. So this makes no sense for me to hold financials and they just gonna go down with the bonds, and hold the energy is just gonna go down with the bonds. I'd rather just sit and I'll wait till this market turn over and go the other way. If it does, whenever it does. So there, like you may say, so you can't. Yes, you can short, but a lot of, depending on what type of brokerage account you have, it may be hard for you to short futures. I know TastyWorks, you can trade futures with a relatively small account. Here, if I didn't want to short these, I could actually just come and then get long the yield. I could get long the 2 year, um, and just hold that. I could do that, and or I could just do what I did, um, put some little cheap spreads in on the notes. So for the most part, though, we'll see how this plans out. How this plays out. This is a big, like, you don't see these type of harmonic patterns all the time, and I'm talking about where the Fibonacci levels like line up perfectly. Like you even got a doji right here where it turned and it came down and hit this level, boom, and it came up and hit this level and then gave us a long wick. Now and then, I mean, it reacted off the level and then gave us a real long red candle, like it hit that level and is doing what it's supposed to do. They rarely do what they're supposed, like how you draw them up. And if this one, if I'm correct, it's gonna come down here. We probably hit this tomorrow. And with this just crossing over the awesome oscillator. Now, this setup that I'm using is called my chaos setup, right? Or not mine. Someone else had it before me. But that's just what I call it, that, right? This is a Williams like alligator. And this right here is the awesome oscillator. It's the line instead of just the histogram. And right here is the acceleration, deceleration. And basically, to sum all that up, just to make it easy, right? You want to be, if everything is red, I got a red candle. I'm red on my awesome oscillator, which is my momentum, and I'm red on the acceleration, deceleration. So it's accelerating to the downside. So in that instance, you want to be going in direction of momentum. It's just a momentum setup that makes it a little bit easier than some of the normal setup that I use. So with that, guys, like I said, um, I am short. I'm still short that, and I actually put a trade out, I think, earlier this week, on the semis. Well, I bought a put spread in here, so we'll see. Um, on this one, I think you can see it right here. I paid $97 for it, and you can see right now it's right at $97 still. So no harm, no foul on that. I actually was up, and then it broke out the day, went up a little bit, so brought me down on that position. But we'll hold that. I got a GTC order in that. It's gonna sell and close it out at 145, and then that'll be that. Also, just a little, if you Google chat, what is it, GPT or GBT? I think it's GPT. You Google the AI, the craze over the AI thing that everybody, you go in and then you type in your dialogue, you ask it questions, or you have dialogue with it, and it can spit out, some random things or whatnot. I seen it. I'm in a group chat with some guys, and someone had where they asked it about the market crashing, and it said February 15th, right? Now, that it could just be random. It don't mean that it's accurate or anything like that. I'm just saying there's a lot of risk. We have geopolitical risk with what just happened with the United States and China and that spy balloon, right? So it's a lot of risk out there. Why would it say like what random? Why would it randomly say the 15th? So just a couple that little that couple with this Gartley. Um, I'm gonna sit, like I said, I'm gonna wait and sit out as far as like owning stocks. Now I'm gonna trade. The market go down. I'll trade with the market. But as far as like owning stuff and sitting on it for a while, nah, I'm not interested in buying and holding until this turns. I don't want to be buying and holding until I see, as long as the bonds and it looked like it's getting ready to break below the zero line. Until I see the bonds turn and break back above the zero line, like I want to see it back up here. Hey, it break out of here, I buy it. I'll buy the market, not necessarily buy the bonds, but I see the bonds on an upward path, then I may buy the market, right? I may get long some other stuff. I'll get back in the XLF and the XLE. But as of right now, we're gonna sit that out on the sidelines. Hey guys, if you got something out of this, hit that like button, hit that subscribe button, share this video, and let me know your thoughts. Let me know what you're thinking. If you know anything about harmonics, let me know. Like, if that, did you see that, or do you see that? What you think about what is your analysis telling you? Comment in the comment section. And if you want to trade with TastyWorks, I got a link. You can use my link and sign up, open up an account. Then that way you can trade futures and stuff as well and not be confined to just, stocks. So with that, guys, I'm gonna be out. Peace.